right.
The broadcast is now starting. All attendees are in listen-only mode.
Good day, everybody. This is the Forex Fundamental Analysis for July 20th, brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Before we begin, a few disclaimers, some housekeeping. Trading foreign exchange on margin carries a high level of risk that may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer: information in this webinar is provided as general market commentary and does not constitute investment advice. A few quick words about myself. My name is Yohay Elam. I'm a Forex analyst. I used to be a computer programmer and retail trader. Founded Forex Ranch back in 2008. Focused there on fundamental analysis, and also here, but we'll touch on levels. So, first we'll begin with this main stories that are moving markets. We'll continue with the next events to look out for. We have the ECB today, the Fed next week. We'll discuss key levels of support and resistance, of course using the charts, using the MT4 platform, and we'll do it for all major currencies. So when we're talking about the US dollar, we'll focus on dollar yen and the moves there. Then we'll discuss the euro, which made a big break to the upside, the pound, which made a break but then retreated, a bit more mixed, the Australian dollar, which, well, one of the most important breaks there, 2-year high, and the Canadian dollar, which made its move already last week but is still quite significant. So the big story, what sent the US dollar down this week comes from politics. So Senate Republicans, this time they have withdrawn their attempt to change Obamacare, to withdrawn their healthcare bill. The story is still going on, but apparently with the unified government, they cannot pass this legislation. And for markets, it means a lower chance of stimulus, of tax reform, of deregulation, things that markets want, things that have pushed the dollar higher. So what we're seeing is a retreat of the dollar. Also in politics, the Russian scandals of Trump continue. Last week it was about the son of the president. These stories were going on. The son of the president, Donald Trump Jr., will testify next week, and there are new revelations every day. We can talk for hours about this. We won't do that. But in general, it is also a thing that lowers the chances of stimulus, what we need to know, and also weighs on the US dollar. In any case, the fall of the dollar that we've seen this week is not only because of the healthcare bill, but because the dollar was already vulnerable. Last week we had poor data, the inflation data, we'll mention that, dive into that later on. And also Yellen testified, the chair of the Federal Reserve, expressed a bit more caution. So the dollar was already vulnerable. This Trump care bill was just the spark. Okay, and just this morning we had the Bank of Japan leaving policy unchanged. Widely as expected, I see no significant impact on dollar yen. What we have next week is the Fed decision next Wednesday, and this is already causing tension. We'll preview that. So just now, I mean, the last few hours we're seeing some kind of US dollar correction, but it looks a bit shallow. It's not a change. All in all, the US dollar is falling this week. So a bit of data points. Most important data point last week came on Friday, with core inflation rising only 0.1% month over month. Headline inflation remained flat. Inflation is going nowhere fast. Less of an urge for the Fed to raise rates, and a weaker dollar. At the same time, we also had retail sales. They disappointed on all measures. Retail sales, headline retail sales, core retail sales that of only items that belong to a specific control group. No matter how you look at it, all the figures came out below expectations. The main headline number fell by 0.2. Also, consumer confidence dropped to 93. Not all figures were bad. Industrial output beat expectations, rising 0.4. Import prices did not surprise, they dropped 0.2. And housing data. We got just yesterday both figures, housing starts rose to 1.22 million, and also building permits beat expectations, came out at 1.25. So, next big events to look out for. Well, today we have the Philly Fed Manufacturing Index and the weekly jobless claims, which have been so stable, they've become less important. We have on Monday existing home sales. Most sales are of existing homes. On Tuesday we have consumer confidence from the conference board. This is different from the University of Michigan. Probably show another drop. And on Wednesday, new home sales. There's a good correlation between sales of new homes and overall growth. But the big event on Wednesday is the Fed decision. We'll talk about that soon. And another big event next week is the US GDP. It's the first release for the second quarter. That means it will have a bigger impact because it's the first estimate, the first look into the most recent quarter. Okay, let's talk a bit more about the Fed. Central bank always moves markets more than anything else. In general, it's a sort of downbeat meeting. No press conference, no forecasts. That doesn't mean no action. The big question for markets is, does the Fed still see low inflation as transitory? Inflation dropped. Last time they told us it is only because of one-off things, prescription drugs, wireless charges, and all in all the economy is doing well and inflation is expected to pick up. However, since that meeting we had another set of low inflation figures, another set of low wages, and a bit more caution from the Fed. So do they still see inflation as transitory? That would be positive for the dollar, okay? Because the plans would be intact, no changes, and if they don't see it as transitory, if they are worried, it could postpone the next rate hike. That would hurt the US dollar. Of course, the Fed decision comes 2 days before we get the GDP report, and the Fed, because they are close to the information, they might already have the information, so we might try to get some hint about growth from that, but they're usually quite silent. Okay, and another question, where there are dissenters. Did someone vote against the decision? No rate hike is expected in any case. Most important thing is the tone. Dollar yen in general, last uptrend support. We'll show that very soon on the OctaFX platform. The US dollar is weak across the board, not only in dollar yen. The Bank of Japan, they tried, Kuroda and his team in Tokyo, trying to keep the pressure on the yen. So far, no success in this most recent rate decision. They didn't make any changes, and hard to see any rises from here. Probably not a big fall under 108, but there is room to see falls within the current range. Okay, let's look at the charts. Let's look at the OctaFX MT4 platform. I know many of you use this. So here we are. This is the uptrend support line. Let's zoom in just a bit. You can see how from the middle of May, June, the pair advanced alongside this uptrend support line. Very steep, very nice. It even made a move above resistance at 114.30, but couldn't hold. You can see it made a false break here and then fell. It lost uptrend support. Not only losing uptrend support, it served as a bearish sign, because from here we dropped to lower ground. So that's why I see here potential for more downside. In general, if we do have a big break to the upside for any reason, then 117 is the high level, then 115.45. The recent top of the cycle, 114.30, is strong resistance, followed by 113.60, then 112.60, 111.80, which we've seen the pair flirt under this line, but I wouldn't call it a break so far, 110.70, and then way below 108.10, the cycle low. So all in all, I think we're seeing a downtrend within the range. No breakout. We have breakouts on other currencies. All right, let's move to euro dollar. So we had a big breakout in euro dollar. We reached the highest level in 14 months, above 115. Currently at just above 115. We had some kind of a retreat from the highs. High tension towards the ECB. The ECB is meeting today. We'll preview that soon. The inflation levels for June were confirmed. they repeated the preliminary numbers, 1.3 on the headline, 1.1 on the core. Everything is set for the ECB. No surprises from the German investor confidence. All in all, we didn't have what we've seen so far in euro dollar is totally related to the dollar. But now we have the ECB. Before that, we have a current account. Shouldn't move markets too much. The rate decision itself at 11:45 GMT, but the most important event is the press conference by Mario Draghi beginning at 12:30. On Monday, looking already forward, we have purchasing managers indices between 7 and 8 GMT in the morning. And then on Tuesday, the IFO business conference from Germany. And on Friday, next Friday, we're looking at fresh inflation figures already for the month of July. Okay, so let's preview the ECB, the main event. Mario Draghi, the president of the ECB, always moves markets. The big question is, will the European Central Bank taper in 2018 and how? Remember, they're buying bonds, they're printing, they're creating money, 60 billion euros a month, and buying bonds, most of them government bonds, some corporate bonds. This puts pressure on the euro. It's not new, and the euro is rising because of the speculation that they will create less money, that they will taper these bond buys. The program runs until the end of the year. President Mario Draghi will try to keep things balanced at this specific meeting. Like the Fed, there's no new forecast here. The big decision comes in September. All in all, the basic picture is that growth is good in the Eurozone. We've seen that in the past 6 months, 9 months, and the recovery began beforehand, but inflation is rising very, very slowly. Not very different from other places, but certainly we have this gap. Markets became a bit more optimistic since Draghi spoke in Portugal 3 weeks ago in Sintra. He talked about deflation being replaced by reflation and that they'll have to gradually remove stimulus. He also will appear at the end of August in Jackson Hole in the United States. That was not scheduled beforehand, and he's expected to provide some hint there. He did provided a similar hint about QE 3 years ago. Now, given the current rise of euro-dollar, I suspect that he'll try to weaken the euro, to try to curb the enthusiasm, to calm things down. He would like a weaker euro that would help with making exports attractive and pushing inflation up. So what we can expect today from the ECB is that they'll probably remove the option to enlarge QE. Okay, they had all the options on the table in their statement. We can either raise the amount of bond buying or the duration or lower it. They'll probably remove the option to print more money. Okay, and they'll probably be telling us that they began discussing the next move. So far, in all the statements we heard so far from the ECB, they said it's too far in the future and they didn't even talk about it. So just telling us they talked about something without details is also one step, very small step forward. On the other hand, again, Draghi would like to keep the euro a bit low, so they might emphasize the downside risks, and they'll express worries probably about uneven growth. Different countries are growing at different rates. All in all, again, they want a weaker euro. They cannot say it because they always say that the exchange rate is not a target, but they do care about it. So, all in all, euro-dollar, the ECB and the Fed are balanced for now, but both central banks make decisions very soon. The ECB today, the Fed next week. Growth is still stronger in the Eurozone than in the United States. Politics also look more stable, we talked about that. And now the better situation in the Eurozone in comparison to the US is better reflected in the value of euro-dollar. We had a move to the upside. Now let's show you this move to the upside. So here we are, euro-dollar, an uptrend since the beginning of the year. A big break most recently, reached a high here of 115.80. That's very close to the 2016 high of 116.20, followed by 117.10 if we have a big breakout. 117.10 was the high in 2015. To the downside, we have 115, a round number, closely followed by 114.45. Then we have the previous range between 114.45 and 113, then 112.30, the range before that, beforehand 111.20 and 110.20. All in all, we're seeing an uptrend, but it's a very cautious move. 2 steps forward, 1 step backward. Let's see if this continues. Currently, we have some correction from the highs of 115.80 seen earlier this week. Okay, let's continue to other currencies, to the pound. In the UK, inflation fell. It hurt the pound to 2.6%, weaker than expected. It lowers the chance of rate hike. We had a big dilemma in the UK. For now, we haven't heard from the Bank of England. We haven't heard a response to that. Let's see how they respond. They can go all over the place, as we know from Governor Mark Carney. Can be very optimistic one week and very pessimistic the next, the other way around. All in all, the recent move higher in the pound is related to the US dollar's weakness. Brexit negotiations, they have resumed at a high level this week between the chief negotiators, and they're moving very slowly according to the reports that are coming out of Brussels. So, and also in politics, in internal politics, there was some talk about a plot against Prime Minister Theresa May. After the election result, some of her colleagues in the Conservative Party are thinking of replacing her with somebody else, but so far it's more noise than any impact on the pound. Just something to be aware of. Next events in the pound. Today, retail sales for the month of June, they might be a bit weak, okay, because that's what we had so far in 2017. Consumers are buying less. Next Wednesday, big event, the first estimate, like in the US, the first estimate for GDP from the UK, Wednesday, 8:30 GMT. I suspect that it might even go negative. We might even see a contraction, and that would be a big shock. That could hurt the pound, but you never know. It could show weak growth once again, like we had in Q1 of 0.2. And the next really big event for the pound is the Bank of England's meeting on August 3rd. By then, they will have all the data, and I believe that the chances for a rate hike will fall once again. Pound dollar in general, good. It's taking advantage of the dollar's weakness, the bad economic weakness on all fronts, inflation, wages, everything, and ugly, well, Brexit negotiations. So far, again, in the back burner in comparison to other events. Let's look at the charts. Again, the MT4 on your OctaFX platform. We did see a move here to the upside, okay? Got very close to a previous resistance line there of 131.30, so that's the high, but we retreated from these levels. We're back under 130 at the moment. Well, if we do break above 131.30, we have 133.50 far high above. Then 131.20 mentioned, 130.50 below 130. We have 129.75. Then 128.90, 128.20. Very busy there, and 127 to the downside. So we are seeing a move to the upside, again mostly driven by the weakness of the US dollar. Hesitant pound is being dragged along. Okay, let's continue to commodity currencies. Australian dollar, the big news came from the RBA meeting minutes. And compared to the statement, it was much more hawkish. They're talking about rate hikes, perhaps reaching a rate of 3.5%. Currently, it's only 1.5%. That means a series of rate hikes. It erases the previous caution seen in the statement, and it sends the Australian dollar shooting higher. We got very close to 80 cents. In addition, in China, Chinese GDP came out better than expected, 6.9%. Even though many people think it is inaccurate or don't believe it, it still moves markets. And we had the Australian job report today. This wasn't a big market mover. It came as expected. 14,000 jobs were gained, and the unemployment rate is at 5.6. Next big Australian events. On Friday, we have some speeches from officials from the central bankers. On next Wednesday, inflation report, published only once per quarter, should have a big impact. and that will feed into the August 1st rate decision, which could see a rate hike. And this was totally unexpected until 3 days ago. The Aussie dollar. The Aussie dollar, of course, made a big break, trading at the 79 handle. It could correct before moving higher. Volatility is picking up, and that's a good thing for the pair, for technical traders. And yeah, let's look at the charts quickly. Yeah. So here we are. You can see this is a zoomed out chart. You can see here levels back to 2014. We can see that the pair made a big break to the upside. We're at the highest levels since 2015. So quite a big move. Let's zoom in a bit to talk about more specific levels. Also, when we zoom in, you can see the big breakout. So if we reach very high ground, we're talking about 83 as very high support, very high resistance. 81.65 is next. Of course, the round number of 80, we got very close to that. Under that, 78.40, the previous cycle high. Under that, 77.50, the levels we were used to in recent months. 77.10, 76.35, and 75.60. So currently, we're at the 79 handle, and this is quite a wide range. All in all, big breakout. Expect maybe a correction, but we have a breakout, we have a trend. Okay, and the Canadian dollar. In the Canadian dollar, the Bank of Canada's hawkish hike last week, which they raised rates, upgraded forecasts, hinted about further rate hikes, is still felt. We're still seeing Canadian dollar. It was compounded earlier this week by the weakness of the US dollar. That means that dollar CAD fell more sharply. New lows for dollar CAD, lowest levels in 13-14 months, and made some corrections along the way. Okay, oil prices remain quite stable. Currently, you see them at $47 for WTI crude oil, and that also supports the Canadian dollar. And also, manufacturing sales in Canada came out better than expected. Everything is working in favor of the Canadian dollar against the US dollar, but we might be a bit in oversold territory. On Friday, we have important events in Canada, the inflation report and retail sales at the same time, 1 week after the US. Should be a very significant market mover for the Canadian dollar. On Monday, we have wholesale sales, and next Friday, the big event of next week is the GDP report, published once a month in Canada. Okay, all in all, dollar CAD is in a clear downtrend. Again, everything works in favor of the loonie, Canadian dollar, the C dollar, against the US dollar. The bullishness of the Bank of England, second time I'm confused with this, the Bank of Canada is dominating the scene, and the big level to the downside is 124.60. Okay, we'll show that on the chart right now. So dollar CAD, here is the big downfall. Let's zoom out and show you why 124.60 right here is a very critical level, because if we zoom out even further, you can see that 124.60, the low seen last year, was also the lowest in, well, to reach lower levels we need to go 2 years back to the past. In any case, if we zoom in, we can see the clear downtrend in recent months. The levels to watch out for in dollar CAD: 133.80, 131.60 for looking at very high levels if we have a big reversal, 130.20, 128.50, then 127, 125.80, which was the recent low, okay, and 124.60. If we do break under 124.60, support is found only at 121.80, okay. All in all, the trend is clear. We had some corrections along the way. I suspect we're a bit in oversold territory, but maybe another correction and then we can resume the downtrend. For the Bank of Canada, the most important event is, well, upcoming on Friday we have retail sales and the inflation report. All right, so that's it for today. I'm happy to see lots of action in markets. I remind everybody to use stop loss and trade responsibly. And thank you very much. Comments and feedback are welcome. And see you soon. That's it for today. Thank you and bye-bye.